Yo, welcome back to Infinite Investors, the home for all new and non-investors. I'm Curtis, and today we've got another portfolio update. Sorry, it's a few hours late. I had some things I needed to do in the morning, so wasn't able to get it out straight away in the morning. But let's get straight into it. Today, I'm going to be talking about 3 dividends that I've received this week. I'm going to be talking about the Imperial Brand CEO. I'm going to be talking about the Sentiment CEO, what's been going on, and what my reaction and my strategy is going to be. I'm going to be talking about the US economy, which is pretty important, but more importantly, I'm going to be talking about the UK recession that is potentially impending, giving you some dates for your diary, but also talking about what's going on there in that space. So if you want to know more, please like, please comment, please subscribe. On a mission to get to 2,000 subscribers and get the world of investing out to more people in a clear, simple, and transparent manner. But first, let's get straight into it. You know what? Let's start with the positives. So, I've received 3 dividends this week, and the first of those dividends being Trig, which I received £2.95, which is fine. It's a small dividend, but I don't have that much in terms of a holding there anyway. So, yeah, it was a small dividend I received from Trig. I also received an Imperial Brands dividend, and this dividend was £17.52. Imperial Brands pays a quarterly dividend, so this was just their regular quarterly dividend that they're currently paying to me. And then I received my first installment from the monthly dividends that I get with the new JP Morgan Emerging Markets Government Bond. So I received a very modest £1.12, but this will be a monthly dividend. So if I keep on adding to this will probably just cover the cost in terms of the dividend, cover the cost of the ISA once free trade do eventually start charging the ISA. But yeah, that's what I've received so far. So it's about £21, £22 this week, and obviously coupled with the £107 I think it was last week, and then the week before I think it was another £10 or £12 or something. Excuse me. Yeah, it's been about over £150 I've received in dividends in the past couple of weeks, which I think is pretty cool. And you know, if I keep this going, you know, at some point next year it might be say £400 or whatever. So you know, it's always good to get dividends. I've been talking to a few people on Instagram about, you know, changing strategy to be focused purely on dividends. It's still never going to be my main focus. It's still definitely going to be a byproduct of my value investing, which is a strategy that I did have for the next 1 to 3 years, or maybe even 3 to 5, and I do kind of want to stick with it, but just blend in a little bit more growth as well. But obviously, as a byproduct of value investing, I get some dividends, which is always good to report on. Also, in terms of top movers, which is also some positive news, we've seen that the US stocks for me this week have slightly rose. So First Solar, although still in the red, has actually gone up for me this week, and it's gone up by 4.53%. So that's since the last time I invested, which was on the 30th of September, and I'm going to talk a bit about that later on. So you can see that in this graph. I don't know why you can't see in the 7 day, but you can see that in the monthly graph, it's kind of gone up. But anyway, in the last 7 days, or since the last time I invested, sorry, it's gone up just shy of 5%. I've also seen a rise in Facebook this week as well. And that's gone up for me as well since the last time I invested by 1.78%. And I think despite some of the factors that's going on in the US economy, we're seeing that some stocks are inching higher. So I'm taking this information from Reuters. Again, I'll leave all of the links in the description. But it says a rise in US technology stocks and better than expected economic data in China pushed global equity markets higher on Monday, despite reports that Washington was considering escalating its trade war with China by delisting Chinese companies from US exchanges. So this was saying that despite some of the trade war issues that has been going on this week, we've seen technology stocks have a little bit of a rise. So some of you guys might own some other technology stocks and may have seen a bit of a rise. This potentially could be one of the reasons or factors for that as well. Now, also, I've seen a rise in Trig. Trig has gone up 2.38% for me, which is call. Obviously, again, I hold a small amount in Trig, to be honest, but it's nice to see obviously it's going in the right direction. The JP Morgan Emerging Markets Bond, which I received a dividend for, so both stocks that I received dividends for this week have started to rise up as well. So this has gone up 0.62%, and also I've received gold producers has gone up 3.63% for me this week as well. Now the reason why I think the bond and gold producers has gone up is because I do think that with everything else going down, it's suggesting a very, very negative market in sentiment. And if you go back to the video where I bought gold producers and JP Morgan Emerging Markets Government Bond, it's pretty much as a hedge in play, because I believe that when we do slip into a recession, and it's not a question of if, then obviously these stocks I think are gonna be very, very crucial to riding that out with little challenges and little issues. So they've started to go up this week while everything else has started to go down. So it's actually moving in a quite a predictable way, which I like to see. Although obviously I would prefer the equities to be up, if I'm honest, just because I hold more equities than I do in terms of bond and gold. At least I'm seeing that the pattern and the behavior is working out in the way that I would typically expect, which is positive news. Now for the negatives, I done a round of investing on Monday the 30th and a little bit on Tuesday. So you can see in the activity tab, these are all of my purchases. There was a rejected one here, but these are all of my purchases pretty much on the 30th of September. I did a round of investing, and I invested 1,500, which is my typical dollar cost averaging amount on a monthly basis, and about 585 of it has just been swallowed up from that. So I also obviously invested in the REITs as well on this side. So you can see that here, which is about £100 roughly on both of those two. But again, yeah, the markets literally straight after I invested all started to tank and started to dive down. So what's basically been happening? Let's start with the US economy. I'm reading this from CNN Business. It says the Dow dived nearly 500 points as US economy worries investors. So the Dow and the broader stock market went deep into the red on Wednesday, which we definitely experienced. If you look at my portfolio, you can start to see the way that I invested that first line just above 1 day, and then that second sort of peak line was where actually things were going up in the right direction, and then it's just done a complete reversal. Unless there's another free trade error, we shall find out. But yeah, that's basically what's been happening. And then you can see it's basically been tailing off this week. So I'm just going to leave it here so it kind of has some context. The Dow and the broader stock market went deep into the red on Wednesday as worries about the economy continue to rattle investors. At its lowest point, the Dow fell nearly 600 points, dropping below the 26,000 for the first time since the beginning of September, when new trade tariffs came into effect and saw sentiment. It was the second day down in a row. Tuesday decline was set far worse than expected due to a report on the America's manufacturing sector, and it shows the S&P 500 1.8% down, the Dow 1.9% down, Nasdaq 1.6% down. So all three had their worst one-day drop since August the 23rd. China announced retaliation tariffs on US imports as well. So there's a lot of worry in the market, basically, partially due to the trade war, and partially also due to the manufacturing sector index. So there was an index that basically suggested that manufacturing production has gone down. Now, when we talk about GDP, we're actually talking about consumer purchases. However, the manufacturing side is obviously supply and demand. So if the manufacturing side is dropping down, there is fears that obviously consumer purchases is obviously going to have a knock-on impact and then going to drop down. And the reason why manufacturing is dropping down is because of trade war, because of recession worries, because of all these other factors that are happening in the market. So you can kind of see where this story is generally going. When we take it from the UK standpoint, what we're finding in the UK is that and I'm taking this from the BBC, the UK economy facing heightened risk of recession. Again, I'll leave the link in the description. This was just done on the 3rd of October. The UK economy may have slipped into a recession following a downturn into the dominant service sector, according to closely watched figures. The IHS Markit CPS Purchasing Managers Index for Services fell to a 6-month low of 49.5 in September, and 50 level divides growth from expansion. It suggests the economy shrank 0.1% in the 3 months to September after a 0.2% fall in the previous quarter. Some experts urge caution as official data last month eased recession fears, combined with even weaker manufacturing and construction purchasing managers index earlier this week. September's all sector PMI sank 48.8 from 49.7. This was its lowest since the month after the referendum decision to leave the EU in June 2016, and before that in 2009. So again, the Purchasing Managers Index, which is just what I mentioned about the manufacturing stuff. You've got obviously the whole UK economy worried about the recession, worried about the no-deal Brexit as well, which is causing a lot of these UK stocks to fall. So, a lot of my finance stocks, my insurance stocks, my banking stocks, all of them have had a pretty dire performance over the last 7 days. It's just been the same story with pretty much every single finance or housing related stock. You can just see all of them are going down like a slide in a park. Basically, it's just literally all dropping. So I think there's a very, very, very strong sentiment in the market that is negative, where people are worried. And the reason why is that you need to keep these 2 dates in your diary. So the 10th of October, there's going to be an estimate that's going to be released by the Office of National Statistics, and that is basically going to kind of indicate what is happening with August's GDP and the GDP for the last quarter. That will actually get released on the 30th of October, where we will actually find, are we going into a recession or are we not going into a recession? Are we having another, consecutive quarter of negative GDP? And if so, then obviously that technically means we are into a recession. So that is obviously something to bear in mind. Obviously, on top of that, we've got the whole deal, no deal Brexit situation, which is going to be happening by the end of this month. So I believe October is going to be a very, very turbulent month. I'm personally anticipating more falls, so I'm not going to be surprised if next week I report it's gone further down and down and down. But I will be patient to see what happens at the end of October, and that's probably going to set the trajectory of what's going to happen for the remaining of this year. 2 things to talk about as well is that the Imperial Brands CEO, she stepped down, and the reason, I think one of the reasons why the Imperial Brands CEO stepped down is because of poor performance. So she's kind of not, I don't know if she's been forced out, but she's going to be looking for a replacement. So she hasn't been forced out, to be fair. Her name is Alison Cooper, and so she's been there since I think 2010, and shares have fallen about 15% over the past month. And she struggled with the whole strategy on vaping products, but because of Trump's administration plans announced last month to ban most vaping products in the US, it's obviously caused that bad performance. I'm taking this information from the Wall Street Journal. Again, I'll leave the links in the description for you guys to know. So I reckon there's going to be a lot of turbulence with Imperial Brands specifically. I'm going to continue to hold it. I'm not going to sell at a loss, but I will say that it might be a potential opportunity, just because going back to the whole recession strategies video, if we do slip into a recession, then you're probably going to see sales of tobacco, which is a bad thing ethically speaking, but economically speaking, I guess it's a good thing for investors. It's going to start potentially rising. Also, we've seen the Centamin CEO Andrew Pardey, he has decided that he's going to resign. He's got a 12-month notice period. Imagine 12 months notice. I'll tell you, if I want to leave somewhere, man, I'm not waiting 12 months, I'll tell you that. But obviously he's getting that big bag because he's getting that lot of money, so he needs to wait that 12 months. But he's going to be continuing his responsibilities and also looking for a replacement as well. But one thing that is quite positive is that he expects that the guidance of the production of ounces of gold will still be achievable by the end of the year. So reading this from Markets Insider, further regarding its production guidance, the company now said the lower end of annual guidance range, i.e. 490,000 ounces, remains achievable. And so because of that, I think potentially if they can do that, Centimet's performance can start to go, you know, in the right direction towards the end of the year. If you look over the course of the year, it's starting to dip back to levels it was at the beginning. There was obviously that big rise when we were just being hammered with trade war, recession talks over the last like few months, and it started to fall again. But I think it might close higher on the end of the year. So obviously I'm naturally going to still hold sentiment, and like I said, the gold producers, which does hold a little bit of sentiment in there, started to rise. So I do think it's an indication that, you know, gold will potentially go in the right direction. So my strategy: continue investing. I'm not going to change anything at the moment. Obviously, where I can sell something that I feel is not going to fit my strategy, I will sell it and I will let you know. But at the moment, I'm going to continue investing. While things are falling, I still believe the recession is pending, and you know, those dates are going to be really, really important, and that will basically tell us, you know, what the course of next, you know, the rest of this year and next year is going to start looking like. Also, in other news, I have bought some Bitcoin as well, so I'm going to do a separate video on that just to not drag this video out. I bought some Bitcoin, so I'm going to let you know my reasons why for buying some Bitcoin in a separate video, and then yeah, give you my thoughts on that. Other than that, I hope you found this video interesting. Please like, please comment, please subscribe, and I will catch you next time with another investment video. Peace.